Good morning, everyone. Welcome to the fourth of our 5 live webcast series on business disruption. This episode is on market risk. My name is Steve Waite, the CEO of the Business Centre, and I'll be your host today. For those of you who don't know the Business Centre, we are a not-for-profit organisation. We're based in Newcastle for 35 years, and what we do is help small businesses across New South Wales. And I guess this is why we decided to run a series of 5 live webcasts where we've invited 5 experts. Mitch is with us today to provide you with simple advice to help you navigate through a period of profound business disruption. Our 5 episodes in the first series are attuned to the small business experience of this situation, and we want to ensure that the information is deliberately practical and that it offers helpful insights for you right now. Our previous episodes in the disruption series have been on people risk, financial risk, operational risk, but today we're looking through market risk, collapse of market or a market under severe disruption. And we'll focus with our guest, Mitch Griffiths, co-founder and director of business turnaround insolvency firm, Rapsy & Griffith. Prior to working with Rapsy & Griffith, Mitch worked with national insolvency firms in both Newcastle and Sydney, and he gained valuable industry experience working across a large range of industries, including building and construction, manufacturing, mining, hospitality, tourism and retail, but also with individuals who are under financial distress. His focus is to provide clear and concise commercial advice to solve difficult situations. Although we acknowledge here at the Business Centre uncertainty is a constant and has been with bushfires, with drought, for example, it's quite pronounced at the moment. So right now in today's episode on market risk, we're going to try and address with Mitch the following few aspects. So it's a gallant attempt that we're going to make to work through a whole range of things, but these are the things we'd like to talk to. This webcast will be available later for you to go through and just look at some of the answers in detail. Where we can't find the answers during the session today, we're going to do a referral or take those on notice, and we'll come back to anyone. So the areas we're going to cover are crisis management, turnaround strategies. Mitch is going to help us understand the difficult but important thing that we need to countenance, which is insolvency and what are the insolvency options for companies, but also for individuals. We're going to do that in the context of unpacking the recently announced government assistance, look at some of the changes and I guess some of the safe harbour provisions that have been made in insolvency laws, and strategies for what we can use when the crisis is over. Importantly, we've got to trade through this and see what the options are later. As with all our previous webcasts, we'll have live questions being monitored during the webcast today via YouTube, and we'll try to answer those questions as we go through, and where we can't, we'll keep those at the end and we'll answer some of those questions. We'll keep rolling, as I said earlier, with questions we can't answer, and we'll have some additional footage or extras where Mitch and I continue to talk some areas that we maybe didn't cover as well as we'd liked, and we'll have those up as an extra a bit later. So, Mitch, over to you. Thanks again so much. You're one of the very kind people, amongst others, that have come to us and said that you're willing to just provide some insights, provide the benefit of your experience. So we really appreciate you being here, and I want to thank you on behalf of the Business Centre.
Thanks for having me, Steve.
No, you're absolutely welcome. Thank you. But first of all, like us, only a matter of weeks ago, this wasn't what it is now. And we had to make a lot of rapid changes in our business. What have you guys done? What have you done in your own business? How's it affected you guys?
We're probably the same as all professional services firms. The big thing was to get everyone working from home, and then manage staff expectations. A lot of businesses, their staff will be saying, "What's happening? Is my job secure? You know, is the business secure? What are we doing? Where to from here?" And it's a difficult environment because it's moving so quickly. Steve and I had a conversation this morning about the new JobKeeper payments, and it was only released yesterday. So we've been bouncing ideas off each other, and so like any other business, we're trying to adapt.
So that's what we're talking about over the weekend and yesterday and today. Just the flurry of announcements and policies and new measures and funding and job seeker, job keeper, taxation offsets, etc. It's just a constant moving feast. I guess one of the things we thought we'd be really clear about today is that fundamentals are fundamentals. Debt is debt. Having a credit, to get your business keep moving doesn't move you any further away from the reality of what your business is now, does it?
Yeah, correct. I think there's a lot of noise out there, and in times of crisis, it's really, really important to try to clear up that noise and go back to the business and say, okay, what do we do and what do we need to do, and act quickly.
Yeah. So that's what you do.
Yeah.
You and your business and your associates, day in, day out, week in, week out, month after month, year after year, you just work with businesses at typically these types of situations where they're facing some challenges. They could be facing some severe disruption or loss of market or a loss of fluidity. And it's where you come in and then help them with strategies around managing a crisis, but also getting an exit of some type and turning things around. So what types of strategies do you put in place?
The first step in anything that we look at is to attempt a turnaround.
Yep. So what does that mean?
Well, I've got some tips here.
Yep.
The first one is to acknowledge the problem. Look, in this, what we're experiencing at the moment, it's not hard to acknowledge there's a real issue. But really diving deep down and saying, okay, what is our problem? Is it, like a lot of businesses, that the revenue's just fallen off a cliff? Or alternatively, is it that, hey, we've got a market there, but we can't get supply? There's a number of things. So first thing is pinpoint what your issue is, and take action. Go and seek advice from places like the business centre, your accountant, your lawyers, and work out what your options are. It's really important to have a team around you in this situation. A lot of everything seems to be on pause. But at some stage, we need to get moving and put something together to work out where we're going.
Like we were saying, this raft of government support and government response, which is welcome, very welcome. However, is going to be short-lived, and it won't solve the fundamentals, the core principles of what you're trying to achieve, isn't it? So, so when you've worked with businesses in the past, when they're in a crisis point like this, when you talk about pinpointing, when you're talking about finding the analysis on the numbers, communicating with stakeholders, reassessing their business plan and looking at viability, what type of things have you done in the past? If you can give us a sense of that.
One of the major things people need to focus on in a situation like this is cash. So we can run all sorts of fancy forecasts with assumptions and the like, but for small to medium business, cash is king. And I know that's a bit of a cliche and that's thrown around all the time, but it really, really is. So have a look at your debtors. When are they coming in? Are they coming in? What cash do you have in the bank? It's really, really important to prepare a cash flow and then run some sensitivities. So we thought that 10 grand was coming in on Tuesday. What if that 10 grand actually slips till Friday, Tuesday the next week? And what impact does that have? You know, in these situations, small to medium business need to monitor cash on a daily basis.
And when you speak about looking at the resources you've got inside the business and outside the business, I guess this got to what we were talking about with regards to the JobKeeper response. Key staff, key skills are going to be vital for a business to survive this moving forward, as would be experts that they engage going forward as well. But it's very difficult to do that if you don't know, as you say, pinpointing what are we going to do? You know, we can't do what we kept doing, certainly for the next 6 months. So what can we do going forward?
So that's another point I've got here, is that we really need to reassess our business plan. So what worked pre-coronavirus, does it work now? Or will it work post-coronavirus? So what are we doing? And that was, you mentioned before, Steve, is that we need to go back to the core of the business and work out where is it now and where do we think it's going. And it is a little bit of crystal ball gazing. You know, I'm sitting here with my business saying, well, what does it look like in 6 months? And everyone's probably doing it the same. But it's really, really important to go through and maybe run a few scenarios. You know, scenario A, everything goes back to normal. Scenario B, you're looking at a 25% reduction. Scenario C, it's cut in half.
So this is the type of thing you guys would do with people. So you're taking calls now. Obviously, you're not going to speak about specifics, but what are you sensing of people out there? How are they feeling? What type of calls are you taking?
I think at the moment, everyone's actually paralysed of new announcements every day. We need to be very clear that the government stimulus, although great incentive for those businesses that were profitable, have staff members they need to keep, have the ability to take on more debt, and we'll touch on that later around the 250 unsecured loan. But it's really the calls to say, what do I do? And that's what we're seeing at the moment. Or alternatively, I'm going to run out of cash. And that's a real issue.
Which is, as you said, that needs to be determined quite quickly, and that's not a difficult exercise. If people have difficulty with that, then they should be talking with someone inside their business that's got those skills, or someone outside the business that's more objective about that, perhaps?
Yeah, correct. It's always good to have an advisor to come in. Sometimes in small business, as business owners would appreciate, you live it day to day. Like I live my business day to day. We're a small business. So it's good to be able to go to an advisor and say, what do you think? These are my forecast, or this is what I'm thinking we're going to do. Does this really stack up? And in situations like this, you probably need a bit of tough love. Everyone needs a cuddle, but you need someone to say, hey, I think these are a bit optimistic.
And I mean, we're very conscious. We've got some questions coming through. Might just look at this. From June asks, how can you focus on cash? What are the ways in which you do that, or you help businesses do that?
Yeah, look, just turn your mind to it. So it's more of rather than looking at sales and the like down the line, which is really important, is, okay, where do we sit now with cash? So what have we got in the bank? What debtors do we have coming in? And how does that look if, and like I mentioned before, if that debtor doesn't pay in 30 days, what if it's 60 days? So you'd prepare for a small business a very simple cash flow. Cash at bank, what are your outgoings? What does that leave me with at the end of the week or month, depending on how tight cash is?
And I guess it's important that you get a sense of that yourself before you go to the advisors, or before they would speak to someone like you about the insolvency laws, the bankruptcy laws, or the credit laws in regards to the timings of how you might be able to treat and deal with those risks.
Correct. And everyone's in the same situation with cash. So, having the ability to communicate with your stakeholders, which is another point in my turnaround or crisis management plan, is get in contact with your banks, get in contact with your suppliers, and get help wherever you can. Back to the question on cash, we've also got to look at the quick wins. So let's review our cost base. Let's have a review of that discretionary spend. Non-business critical spending, it needs to be cut in times of crisis. So, we were looking at getting a new vehicle, maybe that old vehicle still works. That also does have implications in the tax benefits that the government's offering with asset write-offs. So, but we were going to do, a business owner was going to go on a business retreat to get their mind right and strategy plan. You probably in this situation don't need to spend that money. Other discretionary spends that if you don't do it, it won't stop your business. And that's what you've got to look at.
Got another question coming in here from Cindy. Do you think we should do a strategy based on 6 months? Is that the timeline we are looking at?
I think that's the language the government's using at the moment, 6 months. It really depends as to, you'd probably set it out, whereas during the coronavirus, and I don't like to use the word lockdown, but that's sort of what's happening at the moment. Forecast out that period. And then from then, you'd add in potentially some sort of uplift in business when everything returns to the new normal.
I guess because your historical trading and profit and loss, although it's a place to base some decision making on, we're going to be in a completely different environment. Although cyclically we may well, have an opportunity to regain ground and some traction, but it's going to be a different approach, isn't it?
It's going to be a different approach, and the question everyone's sort of wondering out there is, when does it come back? And no one knows. At the moment they're using a 6 month, but look, there'd be no harm in forecasting out for a year. And just look at what it looks like, and you can play with the numbers. So increase the sales, decrease the sales. take out expenses, add in expenses, and that, and just have a bit of a play with it.
Yeah.
And it'll give you a feel as to where you're at.
Yeah, this is what we often say here at the Business Centre, that you don't need to be a financial expert in your business, but you do need to understand the levers you can pull inside your business and get an expert inside your business or outside your business to help. We've got another question here before we move on and take a bit of a deeper dive into your understanding and expertise around insolvency. But Sarah asks, do you think we will see more businesses stick around after the latest announcement of JobKeeper? What's your feel?
It was only announced yesterday, so my knowledge on it is probably the same as everyone else's at the moment. We've read the government releases and that sort of stuff. I think it will allow good businesses to keep good people on, but you need to determine if the business is viable.
Yes.
You know, you jump into the JobKeeper. I think it will work because a lot of businesses out there, their major cost is staff. All your service businesses, nearly every business, your major cost is staff. So to answer your question, yes, I think it will help people hang around.
Okay, now this is a territory that sometimes is difficult to confront, but you do it day in, day out, and we'd like you to help us understand and take us a bit further along the pathway of defining what insolvency is. Now we know there's insolvency as far as a company is concerned, but then there's individual impacts as well as a director and so on. So can you just take us through what does insolvency mean for a company? How does what happens?
Look, in general, insolvency, you can't pay your debts as and when they fall due.
Right.
So you don't have enough cash in the bank to pay the debt that's sitting there when it's due. So that's pretty simple. There's different regimes for corporates. So in this situation, in a situation of insolvency, you're looking at a voluntary administration or a liquidation. Firstly, voluntary administration is a tool to allow businesses a breather. Right. You go into voluntary administration for a period of 20 days.
Yes.
You appoint an administrator, someone licensed to do that, like myself. Administrator will go through and work out what the best option is for the business.
Can you work with the owner?
We work with the owner. We take control of the business. So ultimately, it's our decision as to what happens, but we continue to trade that business through the 20 business days and determine the best outcome. So 3 outcomes. The business, we get in there and we look at it and say it's no longer insolvent. Director, you can have your business back. Go on your merry way. 2, you can do what's called a deed of company arrangement. And this is an interesting one in times such as we're in now, is that a deed of company arrangement is technically a deal to your creditors.
Right.
So you might say, look, we can't pay your debts back now. However, we'd like to keep trading. We can pay you 50 cents in the dollar over a year in instalments. And so what happens there is that all your creditors go into a pool. You pay into a deed administrator's account, and then the deed administrator will then pay out your creditors along the way.
So it becomes part of your strategy.
And it's flexible. So your deed of company arrangement can be anything you want.
Right.
It could be, we'll pay you back through trading profits, or alternatively, I have an asset that I'm going to sell outside of the company, and I'm going to kick in $100,000 to give everyone, 30 cents in the dollar.
Okay.
It just allows a good business that's run into some strife. It gives you another chance.
It's got a planned horizon that can get an exit. Do you think the unsecured loan could go into that? Or do we not know yet in regards to how
we
that
don't know
falls when
yet.
it becomes
However,
law?
what I do understand from this unsecured loan is that standard lending practices will apply.
Okay.
So standard credit practices after your 6-month holiday or repayment holiday, after that, if you default, the bank will take its standard course of action.
Typical due diligence from the bank.
And typical processes, and that's understandable.
Yeah, of course.
So that's a deed of company arrangement, good strategy, and it's flexible.
And what's the third one?
If you get into the administration, you realise that, look, we thought this had legs, we thought we could trade profitably outside of it, but no, we go into a liquidation scenario.
Okay.
Which I'll touch on now.
We'll talk more on then. So some of the measures that come into play there are, as we spoke about, the government guaranteeing this loan, but as you see it, although it's an unsecured loan or unsecured finance, the point is it's still debt.
Well,
and banks are still likely to obviously put in place a whole range of standard measures in regard to that. But I guess that's an ongoing area, isn't it? Yet it hasn't quite resolved itself.
Did you want me to just go back and touch on the insolvencies for individuals and sole traders?
Well,
or?
that's what I was going to get at. It's okay. Many of our clients and the people that we work with in our community are sole traders and very small businesses, very good businesses and very viable at this point until this time. What's the impact for an individual?
Yeah, I'll just step back and go through the last option for companies. The last option is a straight liquidation.
Okay.
So you've looked at it, you've done your analysis, there's no way of trading out, you just need to wind things up, and that's a liquidation.
Okay.
Right out. So insolvency for individuals. So people will be a sole trader out there, you're struggling, you've got large debts, you can't pay them. What we'd look to there is the option of going bankrupt. First things first, you try to work out a deal with your creditors informally. Communication's the key in any situation where you're in financial strife. If you put your head in the sand, your creditors get annoyed, and therefore annoyed creditors are going to put further pressure. If you get on the front foot and say, look, this is where I am, I can get into a payment arrangement, or alternatively, I can share 50 grand or 20 grand in between all my creditors. This is all I've got. Does everyone agree? So there's some informal strategies you can look at. Bankruptcy is your last option. The bankruptcy word, a lot of people are intimidated by that, but it really is a tool for you to say, throw your hands up and say, I'm done. You can battle and battle and battle, but there needs to be a time where you draw the line in the sand. So what a bankruptcy does is, as with the corporate liquidations, it'll wipe your debts. The majority of them, are some exclusions, but that's a chat for another day. So you can start again after your bankruptcy, and there's different limitations on what you can and can't do in bankruptcy, but really it's designed to give you a fresh start. You go bankrupt, you shelve your debts, and you start again.
Okay. So I wanted to take a little bit further a step, as we spoke about earlier, with regards to many businesses, such as it is, are very committed to their staff and very committed to their employees, and they want to retain them. But I'd like you to talk to us a little bit about what happens if I go into liquidation. What happens to my employees?
Thankfully, there's a government scheme ran by the Department of Employment called the Fair Entitlements Guarantee Scheme, or the FEG scheme in short. What the FEG scheme allows businesses to do is, if a company goes into liquidation or any sorts of administration and has employees, the government will step in and pay their employee entitlements. Because a lot of the time we get in there and there's not enough money to pay our employees.
So things such as
annual leave, payment in lieu of notice, redundancy if you're eligible under the laws.
Fair Work.
The only thing it doesn't pay is superannuation. So it really is for a director, and I know it even in my business, I care for my staff. Hey, we've got to do a liquidation, but at least you can do a liquidation, wrap things up, and know your staff are going to be taken care of. So it's a great scheme by the government.
Well, that's great. So there's also some issues or some strategies that you've spoken with me about in regards to short-term debts and obligations, and we mentioned about going back into business. So it's just a matter of the exit strategy is really a business strategy as well, isn't it? Subject to a few caveats. The law says, and everyone's worried about this, that if I do a liquidation, I'll never ever be in business again. So if your business fails, you deserve a second chance. And that's what the corporate structure's there for, to separate your personal from your business running activities and protect the director. So if due to this crisis you work out that, hey, we can't come out of this, we've got too much debt, we need to pull the pin, we'll do a liquidation, and then in 3 or 4 months' time, when all this passes and you decide that you want to start up another business, it's legal to do that. The big caveat on that is that it is illegal to take assets from one business and transfer them to another business without value. That's called Phoenix activity. So that's a no-no, but
if you're thinking out there that, look, I really need to do a liquidation, it's the end of the road from me, you do have the ability down the track to be a director again and start another company.
Okay, that's good to know. So I'd like to unpack a little bit. We spoke about some of the changes that the government's made during this period. I guess they've created an extension, I guess, on the concept of a safe harbour or reasonable grounds or provisions, but it's or debt being incurred in the ordinary course of business. All of those things from the Corporation Act, and then they built in some softening, haven't they, and some adjustments during this period. So what are they? What does that mean? Yeah,
one of the major ones was they're bringing a temporary relief for insolvent trading. So I'll wind back. Insolvent trading is that trading whilst you're insolvent. So you're insolvent, you can't pay your debts as and when they fall due. And you should know, if you're in business, you should know the point that, hey, I can't pay that debt, but you go on and keep incurring debt. That's insolvent trading, and a director can be personally liable for that under the Corporations Act. So what the government have done as part of their stimulus package is said, for this period, in this 6 months or more, which they've said, you probably will be trading whilst insolvent because everything's just taking a big hit. We'll give you a relief for 6 months or until otherwise we tell you to not worry about that, just get into survival mode. So I think that's a really, really good initiative for business, probably larger business when you've got boards and that sort of stuff, but even the small guy, everyone needs to be aware that you can't trade whilst insolvent. But the government's come to the party and relaxed those laws.
Can I just ask a question just to clarify this? So prior to this period of adjustment or temporary relief, was it somewhere along the lines of you incurred a debt that you couldn't pay of $2,000, then a creditor could move upon you and you had about 21 days to respond, but so now they've built that out a little?
Yeah, so what's happened there is that separate from the insolvent trading provision, the new one, they've gone to and said, you used to have 21 days to respond, statutory demand, bankruptcy notice. They've now increased that up to 6 months, which gives businesses a little bit of a breather if someone's chasing them for a debt. And it's increased from $2,000 for the statutory demand and $50,000 for the bankruptcy notice. So it helps people out there. On the flip side, it doesn't help people that are trying to collect debts too, because we can't forget about those businesses, and people will be in the same boat. They don't want to pay their creditors, but because they can't. But they've also got people that aren't paying them. So there's a real balancing act to work out what to do.
So your interpretation of it, and it's just you and I talking about it. It's not an exact definition, but so we get to 1 month away from the closure of this 6 month period where you incur under reasonable grounds in the course of business a debt and a creditor pursues you, as long as it's within,
it's within that period.
Right, so you could be right up to the end and you just get smacked right at the end and there's just something you can't meet and you planned really well but you get a surprise or something breaks.
So my understanding is that once the period, okay, this is over now, which will come, this can't go on forever, it'll go back to normal.
Okay. All right, I'm anxious, and we've got time afterwards to do some extras, but I'm anxious for us to get into a couple of other areas. There are some other areas around temporary relief for insolvent trading, which we've mentioned. There's holds on evictions, but there's the JobKeeper payment. I think given it was announced yesterday, and as we both acknowledge, none of this is law yet, and so the fine detail is not available to us yet, but that starts 30 March. You and I were talking about just the central theme of I have staff, I've let them go or I've stood them down. They're now on job seeker as an option. We now got, after a period of, it was last Sunday, that was announced, and then yesterday we had another announcement about a job keeper. What's your advice? As I said, we don't know exactly how this rolls, but what would your advice be to a business? Do I bring them back, the staff that I've let go, as job keepers, or do I let them stay on job seeker? What would you do? How does it work?
It's a real balancing act, and I think the way I look at it is that if they're staff that you want to keep employed and you think that you're going to need them after the case, go for it. The difficulty is that you apply through the ATO, you've got to demonstrate a 30% reduction, and I don't think a lot of businesses, or the majority of businesses that have been impacted by this, will have an issue in doing that. But it'll be interesting to see when the detail comes out as to how hard and fast this rule is. Because you bring people back and then you lodge or you notify the ATO and they say, oh, actually you don't pass. But my view is that the ATO and the government will be doing everything they can to allow businesses to access this.
Because you and I were just talking, just talking about it as a discussion, that what if a business pushed its efficiencies very hard, had to reduce some of its cost, let staff go, invested in some new technology, and as a result of that, they can't demonstrate the loss. They've actually practiced good recovery during this period and made the adjustments. They could be locked out of this because they don't meet that benchmark. So these are the nuances, aren't they?
Yeah, and I think that's difficult for those businesses that had the ability to adapt really, really quickly, had capital they could inject to, get in technology, streamline things. They probably will be penalised. And, on one half, you'd be preferring to have a strong business and had made them changes so you can sail on into the future. Because the difficulty is that what does it look like? And I know I keep going back, but what does it look like post coronavirus?
Yeah, exactly. We're getting towards the end of our time, and I've got a question here that we'll get in first, and then we'll do the others after. And then we'll give you a chance to walk us through and revisit your 5 top points. But we've just got a question here we might look at first. Serena asks, insolvency is part of market risk. What are the other aspects of market risk that you would see for people at this time?
Well, I think this discussion's around the collapse of the market. Everything, a lot of businesses have just turned off. And I assume that's what the people out there viewing at the moment are looking at it. They had a strong business, and it just went down. Bang.
So this whole concept of hibernation, we were talking earlier about, we put out some business disruption tools and updates, and I guess, if anything, and you and I just talking about the concept of pausing, people have paused or got stuck, and we've looked at business model canvassing and just going back to the fundamentals of your business, and it's probably a time to reassess, isn't it, if anything?
Yeah, and one of my tips is that once you get a hold on things, go back to your business plan and say, and really use it as a reassessment. Well, what are we doing? I know in my business it's made me look at, okay, let's go through that profit and loss and have a look from a financial position. Well, what are we spending our money on? But secondly, does the world change? Well, we know it will. So that's quite a silly statement. But what is this business in the future, and what do we want it to be? Use this time, this downtime, given you can take the support from the government and the like, to say, what does this look like in the future? Revisit your business plan, make appropriate changes, reforecast, and go from there.
So if you are reassessing, it could well be that you could use this time to train staff, introduce new technologies, new equipment, new processes. If it's in your business plan, if you're going to recover and you're going to invest in human capital, it could be that you use this time now.
Yeah, exactly. And the other big thing is to have a look at this crisis. People have to look at their business and say, is this viable? Because if you're carrying debt prior to the crisis, you're still going to be carrying debt, even more debt after the crisis. Are you in really a viable business? And it's a very, very confronting question to ask yourself. But advisors out there need to be sitting down with their clients and saying, let's look at this. You've made losses for the last 3 years. You've got $200,000 tax debt. Are you really going to get out of this? Because all of the government stimulus will not help businesses that are already struggling. And there will be people sitting back there waiting for a government handout, and they're not going to get it.
No.
Businesses that were struggling before that weren't viable aren't going to get a free kick from the government and continue. No. And that's the big thing about this.
Yeah.
You need to act and you need to plan forward.
Indeed. Okay. Well, let's look at your 5 top tips, and then I'll close and introduce people to our next webcast and hand over to you for your 5 top tips.
Yeah, sure. This is a rehash from a lot of the themes I've spoken about. Yep. So acknowledge the issue and act. Don't sit there. Don't put your head in the sand.
No.
Unfortunately, the government isn't going to bail you out if you had a underperforming business prior.
Yep.
Understand the numbers.
Yep.
For small to medium business, do simple forecasts.
Yeah.
Use some sensitivities. Decrease revenue, increase revenue, and do the same to costings.
Yeah.
And focus on the cash.
Yeah.
So look at what debtors you've got to come in, look at when your credit payment terms, and look at your cash in the bank. It's simple, but keep it simple.
Yep.
Look at your quick wins. So cut non-business critical expenditure. Any discretionary spends that you may have had in your small business probably need to stop.
Yeah.
Communication, it's key.
Yeah.
So talk to your lender, talk to your suppliers, talk to your customers. Landlord, keep everyone updated.
Yep.
The last one is reassess that business plan. What does it look like when the crisis finishes?
All right. We'll continue our conversation again on behalf of our organisation and the businesses that we support and others. We really appreciate the kindness that you've given us of your time in preparing for this and for being part of today's webcast. So thanks very much, Mitch. I'm just going to say goodbye to everyone and just acknowledge a few things along the way. So time to wrap up. First, as I've said, I've thanked Mitch and we very much appreciate the help that he's given us. If you want to contact Mitch, please email the Business Centre and we'll forward on your details. If you want a business advisory session, which is subsidised through the New South Wales Government's Business Connect program, which also subsidises these webcasts, please get in touch with us. We've already started to develop a business disruption toolkit and are sharing those resources. Our next webcast is on Thursday, and that's on reputational risk. One of the things, if we're going to be trading through this period, is to protect our reputation, protect the integrity of the business, and we've got Pete Chapman from Enigma coming to talk with us and spend time on that. We're then going to be moving on to a second business disruption series, and the first one off the rank there will be focusing on the NDIS sector and how this impact of this event, along with all of the changes and the regulations around the NDIS marketplace, are impacting. All of the information that we provide here to you is published. Please register for our webcasts. Everything's up on our YouTube channel, past and extra footage. I really want to thank Jono and the boys from Fortronic. They provide great expertise, and if you're interested in this type of approach to messaging for your business, then contact us if you'd like to use this facility and work with Jono and the guys. That they do a fantastic job. I'd also like to acknowledge Gordon Whitehead, who's our project lead on our webcasts, and also Brooke, Kristen and Joanne. None of this happens without all the other people in the background. So thanks, that's it for today. If you're interested, to please register for our next webcast on Thursday. We're going to leave it there, and we thank you very much for joining me. And also, once again, thanks, Mitch. We appreciate it.
Thanks, Steve. Thanks for having me.